Hello students, good morning. Today I will discuss one of the important concept but small concept from your final account, which is on corporate accounting. The concept name is declarations of dividend and payment of dividend, and what are the treatment of any unclaimed dividend. So these are the three different things underneath we will discuss. So let's now first understand what is dividend. Then I will be telling you what is a declared dividend, what is the difference between a declared dividend and a proposed dividend. Then I'll be telling you the declarations of dividend, what are the provisions related to declarations of dividend mentioned in your Companies Act 2013. So let's start with the meaning of dividend. As you know, dividend is just a reward which is given by the companies to its shareholders or to the providers of the fund. Shareholders like your equity shareholders and preference shareholders, those who are actually providing money to the company, and the company taking this money, investing in various kinds of assets and doing its business. After performing the business, if the company is getting profit out of it, then the company declares some amount of profit to the shareholders as dividend. So dividend is nothing, it is just a part of profit which is distributed to the shareholders, be it equity shareholders or it's a preference shareholders, right? Now, the next thing is what do you mean by declared dividend or what do you mean by proposed dividend? So to understand that, I will just take you through to the profit and loss statement. If you know the profit and loss statement, if you are going through the profit and loss statement, company prepare the P&L statement at the end of the financial year. So when the financial year, the P&L statement is prepared, let's say it is prepared on 31st March of any year, 31st March of 2021. If it is prepared on this day, there is a computed profit will be there. But now the company is deciding to pay the dividend to the shareholders out of the profit. But the thing is that those who have provided the money, you should take an acceptance, you should take a permission, you should provide a grant of those shareholders. So what happens is the shareholders will be available whenever there will be AGM will be conducted by the company. AGM means the annual general meeting, right? But the annual general meeting never conducts on the closing day itself. But the company has to decide how much money they are willing to pay as dividend. So in this case, what happens? The directors of the companies on the closing date, they are making a proposal that out of the profit of this year, the profit what we have computed so far, we are willing to pay this amount of money, such amount of money as dividend. So this is a proposed one, which is proposed by the directors on the day of closing. Now, when annual general meeting is conducted, after 1 month or 2 months, when annual general meeting is conducted, all the shareholders are invited and the proposal is kept in front of them. The board of directors keep this proposal in front of them that this is the amount of profit what we have inculcated this year, and out of this profit, this much of dividend we are willing to declare, we are willing to pay to you. And if the shareholders is giving an approval to it, the day in which they are giving their approval, from that day it becomes a declared dividend. So the proposed dividend converted into a declared dividend, right? Now, what are the provisions related to declarations of dividend? When the company wants to declare dividend, is there any provisions provided in the law in Companies Act 2013? What are the sources of those dividend? Is only the profit is one source or is there any other source, right? So if you go to the provisions of the act of your Companies Act 2013, it says that there are three different sources. They are saying there are three different sources of your dividend. When a company wants to declare dividend, the company can declare it from three different sources. What are the number one source? Number one source is from the current year profit, right? Current year profit. The company is doing well in the current year and there is ample of profit available with the company. Now the company can declare dividend out of the current year profit. Is there any preconditions for this? To declare dividend out of the current year profit, is there any preconditions to it? The preconditions number one here is, number one conditions, before declaring of such dividend, now the company has to pay depreciation. The company has to claim depreciation on its assets. If the company is not providing for the depreciation, prior to that, prior to providing of the depreciation, the company cannot declare a single amount as dividend from the current year profit. So the first precondition here it is, I have mentioned here, that no company shall declare dividend unless I'll come to this point later on, unless the company provides depreciation. If depreciation not provided in the previous year, then your dividend cannot be declared out of your current profit. So this is one of the compulsory mandatory preconditions to provide to depreciation, to declare depreciation to the to declare dividend to the shareholders. The second source what is available is, that is your source of undistributed or accumulated profits. Whenever there is inadequate profit in the current year there is no profit, but still the company wants to make payment of dividend to its shareholders out of its past profit. Yes, the company can do it. The company can also declare dividend out of its past profit even if there is inadequate profit in the current year or there is no profit in the current year itself, but still the company can declare dividend out of its past profit. Some provisions are related to it. I will discuss in my next slide. The third source on this is out of the money provided by the central government. If there is any money which is provided by the central government or state government for the payment of dividend by the company in pursuance of a guarantee given by that government. If the government is giving such guarantee that yes, dividend you have to declare, and for declarations of dividend government has provided some money, from that money itself the company can declare dividend. So there are three different sources now. Sources number one, dividend can be declared from the current year profit. Sources number two, that dividend can be declared out of the past profit in case of inadequacy of profit in the current year. Source number three, that out of the money provided by the central or state government if the government is giving one guarantee for that. One preconditions for all these three sources, one precondition is depreciation has to be declared, depreciation has to be provided for before declarations of the dividend, right? Then I'll come to my next point, where it says that declarations of dividend out of the reserve, the second source. First source, that is declarations of dividend out of the current year profit, and for the current year profit the company has to provide for the depreciation. If depreciation has been properly provided for, then company can declare dividend out of the current year profit. And next, declarations of dividend out of the reserve. If company wants to declare dividend out of its reserve, out of its past profit, company want to use its past profit. So what are the conditions? What are the preconditions the company has to fulfill? In this case, in the event of inadequacy or absence of the profit in any year, a company may declare dividend out of its free reserves subject to the following condition. Condition number one on this is condition number one. The rate of dividend declared shall not exceed the average of the rates at which the dividend was declared by the company in the three immediately preceding years. In the last 3 years, let's say year 1 company declared 5% dividend, in year 2 company declared 7% dividend, and let's say in year 3 company declared 3% dividend. So total is 7 plus 5 12 plus 3, it is 15%, make an average of it which comes to 5%. So this year the company can declare dividend only 5%, right? So the rate of dividend declared, it shall not exceed 5%. The maximum is allowed is the 3 years average, not more than that, whenever company wants to declare dividend out of its past profit, right? Past profit or free reserves. This is condition number one. In condition number two, it says that the total amount to be withdrawn from the accumulated profit shall not exceed one tenth of the sum of its paid up share capital and free reserves. So make a sum paid up share capital plus free reserves. Make a sum of it and calculate one tenth of that. Right? Calculate one tenth of that, and your amount what you can withdraw from the accumulated profit, it should be restricted to one tenth of this paid up share capital and free reserves appearing in the last audited financial statement. Right? It should not be more than one tenth of paid up share capital and free reserves. Condition number three, that the amount so drawn shall first be utilized to set up of losses incurred in the financial year in which dividend is declared before any dividend in respect of equity share is declared. This means that whenever company wants to declare dividend out of its past profit, first of all, now company can withdraw one tenth of the total sum of paid up capital and free reserves. The money now company they have withdrawn it from this past reserve. That money first you have to utilize, because in the current year you have inadequate profit. In the current year might be there is a loss. So in this case it says that if there is any setup for carried forward loss from the last year, previous years, because your income tax authority, the income tax act allows the companies to carry forward certain losses of past year to the current year. If any losses have so far been carried forward, then first of all the money, the last year profit, first of all you have to utilize the money to pay off the last year the carried forward losses. Any previous year carry forward losses, first you have to mitigate that. Then if any money remaining after that, from that money now you can declare dividend. So if there is any unutilized last year's set of carried forward losses, first of all you have to pay off that money. Then if anything left in that withdrawal amount which you have withdrawn from the accumulated profit, that will be utilized to pay the dividend. I think this is clear, this point. I think this is slightly complicated and critical points of this. Then the point number four, that the balance of reserves after withdrawal, whenever you are withdrawing the money from past reserves, it says after withdrawing the money, it shall not fall below 15%. It shall not fall below 15% of the paid up capital. Now look this point here, it talking about paid up capital. Earlier that was a sum of free reserves and paid up capital, which is one time. It is talking about only paid up capital, 15% of paid up capital. Your balance money in the free reserves shall not be fall below 15% of the paid up share capital of the latest audited financial statement. So these four conditions you have to fulfill whenever as a company you want to make payment of dividend out of the reserves, right? And in the past, in the previous slide, we discussed that how the dividend can be declared out of your current year profit. So once your dividend is declared, once your current dividend is declared, now either from the past reserves or from the current year profit, then within 5 days from the date of declaration, within 5 days from the date of declaration, the company has to deposit the money. The company has to deposit the money in a scheduled bank or in a commercial bank. The amount what company now decided by doing all this exercise, by applying all these provisions, within 5 days from the date of declarations, the company now has to deposit the money into a commercial bank in a separate account. That is declarations of dividend company has to submit. Now the next part is, when dividends are declared, it is not necessary that always you can find the shareholders. There are some point in time when you will unable to find the shareholders after putting enough of effort to search those. So sometimes there may be some uninterested shareholders. Or maybe once dividend is declared, you will publish it in your website, you will publish it in some local newspapers and national newspapers, whatever requirement is there in the law. But after that, there may be some shareholders, they will never come to demand, they will never come to claim the dividend. If they will not come to claim the dividend, this has already been declared, then what the company has to do in this case? So there is a treatment of unclaimed dividend, which is mentioned in the law. The law says in Section 124 of Companies Act 2013 says where a dividend has been declared, right? Where a dividend has been declared by the company but has not been claimed by any shareholder within 30 days from the date of declaration. If which is not claimed by any of the shareholders within 30 days from the date of declaration, we will consider it as an unclaimed dividend. Once I said that when dividend is declared within 5 working days, company has to submit the money, company has to deposit the money into a commercial bank in a separate account. And from the date of declaration itself, 30 days have been passed and nobody has turned up to claim the money. In this case, the company can treat this dividend as unclaimed dividend, right? So the company shall transfer such unclaimed dividend if after 30 days nobody has turned up to claim the dividend once company is declared. Then it says the company shall transfer such unpaid amount within 37 days from the date of declaration into a special account called unpaid dividend account. So from that bank account, you have to make a separate account that is called unclaimed dividend account from 37th day from the date of declaration. That date of declaration, then 30 days company will wait. After that, company will wait for another 7 days. Then there will be on the 37th day from the day of declaration of the dividend. Now company will transfer the money to unclaimed dividend account. Right. Now, the company shall within a period of 90 days, within a period of 90 days of making any transfer of an amount under subsection 1 of the unpaid dividend account, prepare a statement containing the names, their last known address and unpaid dividend to be paid to each person. Then the company has to again verify the names, the addresses, why they are unable, nobody is coming, nobody is actually claiming the money. Then for that company within 90 days, the company what they have to do is they have to prepare the statement, and the statement should contain the names and the last known address and the unpaid dividend amount which is actually they are not claiming, the person is not claiming. Company has to make a list of it within 90 days. Then and place it on the website of the company if any, and the company now have to put it in the website that these are the claimants, those who are supposed to get the dividend from the company, but now nobody has turned up, this person has not turned up, so company has to make it published in his website and also to any other websites approved by the central government, either in its own website and as well as any other websites which is approved by the central government for this purpose in such form, manner and other particulars as may be prescribed. So company here, the main to say is that the company has to take enough of effort, the company has to put lot of effort for that the claimant should get the money. So after doing all these things, company waited for 30 days, then 7 days, then 90 days. If everything is done now but still nobody has coming in, then what to do? Then what to do? Whether the entitled shareholders can claim the amount of unpaid dividend account. The question is, if after that somebody is coming and somebody is claiming the money, yes, any persons which is claiming to be entitled any money transferred under subsection 1 to unpaid dividend account of the company may apply the company for payment of money claimed. So from that unpaid dividend account, whenever a person is coming and they are claiming the money, so they will be getting all the money whatever due to them, right? Now next, for example, after waiting for such a long time, maybe few persons they came in and after publishing in the website, and the company has taken enough of effort to provide the money to the shareholders, to the those who are actual claimants, those who are actual the recipients of the dividend, they came and they claimed the money. But after that, maybe some shareholders are remain still untraced. They are still not coming. Means after 90 days also, after 90 days been passed, no one is also still coming. Then what to do? Is there any further things company has to do, because after 90 days has been passed, nobody has turned up. Few has came in for to them companies have already provided the unclaimed money out of the unclaimed dividend account which they have transferred earlier. Now, coming to the next part of it, unclaimed dividend transferred to IEPF, that is Investors Education and Protection Fund. 90 days have been passed, no claimant has come. Very few claimant they came and they claimed their money and they took the money. Now, any money transferred to unpaid dividend account of the company in pursuance to this section which remains unpaid or unclaimed for a period of 7 years, that is 7 years 37 days from the date of declaration. So that was date of declaration, then there was 30 days and there was 7 more days, so 37 days. From the date of declaration, the company has to keep the money in unclaimed dividend account for 7 years. Company has to wait for 7 years. After publishing everything in the website and the government website, the company has to wait for 7 years from the date of declaration. If after 7 years nobody has turned up, to claim the money, then in that case what will happen now the company has to, from the date of such transfer, the company has to transfer and any interest which is accrued thereon, if there is any interest accrued thereon, to Investors Education and Protection Fund. It is the government fund, right? That is for Investors Education and Protection Fund. So this the money which is unclaimed for 7 years, this has to be transferred to IEPF. Now the company shall send a statement in the prescribed form in detail of such transfer to the authority which is administrators the said fund, that authority shall issue a receipt the company as evidence of such transfer. So after transferring this money, there is an evidence to it. The evidence, the company has to send it to the appropriate authority, so that the authority will come to know that the money which remain unclaimed by any shareholders for more than 7 years, the said company has transferred the money to the IEPF fund. Now the question is, so whether the shareholder can claim, transfer or share dividends from the Investors Education Protection Fund once this money been transferred to an Investors Education Protection Fund after 7 years. If then somebody is coming after that, he was sleeping somewhere or roaming around somewhere, and when he came back and again he asked, he is now demanding, so can he claim? The answer to the question is yes. Any claimant of the shares transferred above shall be entitled to claim the transfer of shares from Investors Education Protection Fund in accordance with such procedures on the submission of such documents as prescribed. So certain documentation, certain procedures he has to fulfill. After fulfilling all these procedures, all these things, now the person, the shareholder, he can claim the money even after 7 years, the dividend being transferred to IEPF account, if I mean Investors Education Protection Fund. So what are the procedures? So process for transfer of dividend. As prescribed the Ministry of Corporate Affairs, that is Investors Education Fund Authority, that is Account Audit Transfer and Refund Rules 2016, on 5 September 2016, the company shall credit the fund due to transfer in Investors Education Protection Fund within 30 days of become due. So the day after it becomes due, the company has to transfer the fund to Investors Education Protection Fund within 30 days when it becomes due. 7 years, 37 days that passed. Then within next 30 days, the company has to submit the money. Company has to transfer the fund to this IEPF account. Now the amount shall be tendered by the companies along with the challan, which is in triplicate, to the specified bank branch who will return two copies of the challan duly stamped in token and having received the amount to the company. Now, every company shall file with the concerned authority one copy of the challan indicating deposits of the amount to the fund and shall fill in full particulars of the amount tendered including the heads of accounts to which it has been credited. Next, the company shall also, with a copy of a challan, furnish a statement of form number IEPF 1. So this is just the process, how the company will be doing all this. You can go through this, that is not technically nothing to understand here. It is a step I have mentioned here, just to understand what are the process. You can read this, you can pause the video here, you can read this process, how IEPF has been transferred. So I think this is, you understood how, what are the various sources of dividend, what is declared dividend, when is to be transferred, then if it is not claimed by any persons, when it is to be transferred to unclaimed dividend account, then from unclaimed dividend account, if there are any penalties due, that is 12% per annum, that has to be provided by the company. If it is remain unclaimed for 7 years in this unclaimed dividend account, then the money will be transferred to investors education and protections fund of the government, and there is a procedure to it. And in either cases, if the shareholders is coming to claim this money from unclaimed dividend account, he can also claim. If he is coming again to claim the money after the money being transferred to IEPF fund, then also he can claim the money, right? So it is the shareholders money, he will be getting it, it is the investors money, it is the public money. So this act has taken full care of entire process, full care of the shareholders, the investors, their interest being properly been taken care of. I think this is clear. The unclaimed dividend, you can write it as a theory questions from your final account chapter. Those who are not interested to solve the questions, the practical papers, practical questions from final account, for them this is one of the important questions. You can go through it. Right? Thank you. Thanks a lot.